So Tesla stock crash 2024, it is happening. Tesla stock is currently crashing and the warning signs have been there for a while with the high interest rate environment and a few bad decisions from the management team and competition coming in. So with Tesla stock crashing in 2024, is this now a buying opportunity? Today we'll take a look. Hit that like button, let's get started. So Tesla stock is having a massive downwards move today, down 10%, and the stock is currently sitting at $185, and that now means year to date the stock is down 25%. So this stock is now massively underperforming the S&P 500, and for the last year really Tesla hasn't really done much. And if you actually zoom out, apart from the big rally that you had in 2019, 2020, the last few years Tesla has been very stagnant. From the next 3 years the stock hasn't really done anything. So the only people that have benefited from owning Tesla stock really are those that bought before 2020 and those that have maybe bought in the opportunity of some dips and then the stock has gone up, which I have done myself. However, I'm no longer a Tesla shareholder. The last time I held shares was actually at the start of 2023 and I sold out here. For me, I was starting to see a lot of warning signs with the stock. I was starting to see the management team make a few decisions I were not happy with, and also the higher interest rate environment. It was quite clear that the high interest environment was going to kill Tesla stock, and that led to me actually putting a few videos out. I said that Tesla stock has problems 9 months ago, and I actually made this video as well saying Tesla stock is I can't say that because we'll get demonetized, but I've been very vocal about Tesla not being a stock that you'd want to be buying at the moment and potentially even own at the moment. And since that stock has peaked in 2021, the stock is now down 54% since that time frame. And the crazy thing is to look back on that time frame, and there were certain YouTubers like Meet Kevin, Financial Education, Tom Nash, that were saying, oh, it's okay to buy Tesla at $407. Anyone that followed that advice has been massively hurt by that. But even during this time frame I was making this video, I was still getting people commenting saying, you don't know what you're talking about. I had a comment, for example, saying from this person here, saying that margins will come back in Q4 and Q3. Well, I tell you what, if you have a look at margins today from the recent Q4, they're going anywhere but recover. In fact, they're only getting a little bit worse when you look at that gross margin. 23, 19, 18, 17.9. Now 17.6. So we're not even starting the recovery yet. We just keep going down and down. So that's definitely not happening. So unfortunately, that hasn't happened. And I got the rambling a load of rubbish, I'm afraid. I know I like to ramble on sometimes, but I definitely weren't rambling on talking a load of rubbish when I was making these videos. So yeah, for me, Tesla's been a stock that I think is going to have some issues. It is having issues, and that's now hurting the share price. And just to show you how bad financially Tesla has performed, I knew this was going to catch up with them sometime. And I think what has avoided Tesla from getting the headlines a little bit is that actually when you went year to date last year, the stock actually looked like it had a fantastic year. 66% up last year. It looks like a good year. But I think it's actually when you zoom out and then realise the stock has been stuck in a range for the last 3 years, you realise the stock hasn't really progressed. And that's the reason why, is because financials have finally caught up to the stock price. You look at where we were a year ago, analysts were expecting 28% year over year revenue growth. What they're actually going to do this year is 19% year over year growth. And in fact, actually, because of missed expectations, they're actually going to come in a little bit lower than that. When you look at EPS, analysts were expecting a year ago of EPS of $4.17. We've actually come in with EPS of $3.15, declining from a year over year, which isn't good. And when you look into 2024, we're expecting 31% revenue growth. This year, analysts are now forecasting 19% revenue growth, and when you look at what they're speaking about during the conference call and the numbers they're currently doing, I think they'll do well to get double digit. I think it's definitely going to be in the single digit range. And from an EPS point of view, we were expecting $5.79. The analyst expectations now is $3.67. I know, this is absolutely crazy, the downgrade. And when you are downgrading the financials, it's going to catch up with your share price, and that has eventually happened with Tesla. Now, when you do look at the numbers, it's grim reading. There's no way to put it. It's the worst quarter I've seen Tesla produce since 2018. Automotive revenues, 1% year over year growth. When you are an automotive company, and that's what they are. I know a lot of people say other things. The majority of the revenue comes from here, and that's what you've got to look at. 1% growth, very disappointing. Energy generation and storage revenue, 10% growth. This is the worst numbers we've seen from this segment for a long time. Service and revenue and other revenue was up 27%, which looks good on the face of it, but it's been a little bit slower than what was expected from previous years. So not great there. So total revenues up 3%. Total gross profit down 23%. That's what we said, when we're making these videos. If they have to keep doing price cuts, people were saying, oh, it's part of the Elon Musk master plan. It's not. The big thing that matters in the stock market is the financials and growing your revenue and growing your profitability. And if you don't do that, it will hurt your share price. Forget Elon Musk and what he says. He's a great talker, and I think, to be honest with you, he's done a good job as a CEO to protect the share price by talking a big game. But when you look at the delivery of the financials and the execution, it's been poor, and eventually it's caught up with them. So great talker, but financials are the important thing. And when you see the prices going down, that is eventually going to hit your gross margins, and that's what's happened. Not part of a master plan. Operating expenses up, oh, by the way, total gross margin down 6.12%. Operating expenses up 27. I mean, that's not what you want to see. When you're seeing this happen and your expenses are going up, crazy. But obviously they're having to ramp up the Cybertruck, which once again was a poor choice on the model, which we said on the channel. It was a poor choice to make that model, and that's hurting them as well. Income from operations down 47%, operating margin down 7.84%, adjusted EBITDA down 27%. It's just awful reading when you're looking at these numbers. And I think you got to give credit to Elon Musk, because I think if this was any other stock that were doing these financials, I don't even know that if they would be trading at 43 times earnings. So he's done well to keep the stock up this high for this time being. I think most other stocks would have might have been killed off a little bit by then. But ultimately, we're looking at this now going, is this a buying opportunity into Tesla? Could you buy Tesla? And you guys know me. I was a shareholder in 2018, held the stock, made a really good amount of money. Bought back in 2021, the stock went up, made another 100% on the stock, and then I bought again in this dip, and I bought the stock and made a 25% gain. So I am willing to buy Tesla when it's the right valuation. Now the problem with Tesla is from 3 years ago, when I was buying Tesla at these levels, the stock was growing EPS rapidly. The EPS was doubling. The revenue was also growing 30-40%. Now realistically, this time round, the EPS isn't growing at the moment. I'm not buying a company that is growing 30%. I think the company that is forecast to grow at 19% this year is more going to grow single digit. And the big thing from 2 or 3 years ago is competition. Tesla was far ahead of the pack. It was bringing out fantastic models. I don't really like the Cybertruck. I think that's a bad model they've chosen to do. It's too much of a Marmite. You either love it or hate it. It's not practical for Europe, so that's a big market gone. It was a horrible choice. So I think there's been bad management choices. Competition is coming up. We have the likes of BYD that has been popping up in China. They're losing one of the big markets in China at the moment because of them, and they're actually taking over as a leading global electric vehicle market. And when you look at BYD, they're a company growing at 45%. So it shows you that even in this high interest rate environment, you've got a company here that's still growing rapidly. So Tesla has had harder comps to get over, and the high interest rate environment is hurting them more. But it's still possible to potentially be pulling out better financials than what they are doing, because there is companies in this area that are still growing. So when I look at Tesla, I'm not surprised to see that it's suffering on a share price point of view. I saw this happening a year ago. That's why I don't hold any Tesla shares, and why I've been so vocal about Tesla not being in a good place. But now I'm looking at it, is there a buying opportunity of me buying Tesla? But like I said, there's been so many changes in the last year where management haven't made decisions I like. Competition is a lot higher. The financials are a lot even worse than what I was expecting, and I was expecting a big downturn. That realistically, if you came to me at Tesla 2 years ago at $185, I'd probably be a buyer. But realistically, still paying up 43 times earnings for a company that has just come off these numbers where it's growing 1%, where gross profit is down 23%, adjusted EBITDA is down 27%, net income is down 39%, it might look okay at the moment, but more than likely, when you actually start looking on a forward PE, it's not realistically that cheap at the moment. So for me with Tesla is that 2 years ago, I might have been a buyer at these sort of levels. Right now, I don't think I can buy Tesla because it has so many problems. I think in the long term, it'll still be a decent company. They still have good market share. They still have the potential to expand. They also have potential to expand into other income streams and the service revenue and the solar energy. But at the moment, they're all small parts of the businesses and there's not much recovery being shown in the financials. So, I mean, for 43 times earnings, I can think of a few more companies I'd rather buy at them sort of levels. Realistically, I think with Tesla, I used to say 150 was my marker to buy. I think realistically, I've got to see Tesla go down to these sort of levels that it was at in 2023. I'll have to double check and fully run the numbers on Tesla, but I think realistically, I probably wouldn't really want to touch Tesla for maybe $120. But even then, I've got to think that I see Tesla showing no signs of recovery in the coming few months. They even warned that their volume growth may be even notably lower in 2024 than seen in 2023. So it's going to be probably another tough year for Tesla. So I'm in no rush to buy, and I'm going to play the waiting game and see if we do get to the low 100 mark. And if we do get around to the 120 mark, I might have a serious look at the time when it gets there, what the financials are. Because if the financials are a lot better by then, or showing signs of recovery then, I might buy. And if interest rates are going a little bit lower, that will also help Tesla. So I'm watching it, but I've got to say that normally it's getting close to levels where I might be a buyer. I think realistically, I've got to see it maybe go another 30%, 40% lower before I do buy it, because there is a lot of issues at the moment with Tesla. So yeah, I thought I'd give you an update on Tesla and why it's going so wrong for them. But at the same time, I thought I'd make a video going, I told you so. It's one of those that the warning signs were there a year ago. I showed you guys, and hopefully some of you guys listened and maybe have a think about it. But it's one of those that you call right and you get no credit for. I'm sure if I got Tesla wrong, I would have had it in my comment section for the last 24 hours about how Tesla's doing absolutely amazing. But it's one of those. Anyway, so I tried to say that I think Tesla's going to have problems, and there we go. But we'll keep an eye on it now and see if it does come a little bit of a buying opportunity. Anyway, hope you enjoyed the video, guys. See you in a bit.